Welcome to the Liquidity webinar. Good afternoon, everyone. The Liquidity is a retail financial markets broker established to provide advanced trading environment and seamless connectivity while bridging the gap between the traders and the capital markets. This webinar is hosted by the renowned Anil Mangal. The duration is approximately 30 minutes with a 10-minute question and answer session. Anil, your room.
Hey guys, good afternoon. Good afternoon, Adnan. Sorry for that little mishap there. I hope we're live on YouTube, and I hope all of the people who were on Facebook managed to move over. So, Adnan, can you check, see is everybody over, or should we wait for them before I start?
Sorry for that little mishap.
Yeah, I think everybody is over. I've started sharing the link and
okay, so how much people we have in the room, if you don't mind me asking, because we don't want to start the webinar and don't have people in the room. I can't see that. I don't see the stats.
Yeah, we're going to start having the people moving over very soon. So I think we just should start and they'll just move over.
Okay, so good afternoon there to everyone. If you will be coming over, I hope you can watch the starting if you miss it. So today's topic we're going with is Forex a get-rich-quick scheme? I think most of you might have heard this statement already. You can really make big money in Forex with very small capital. So let me, very short, tell you how this works, because I don't want to burst your bubble in too early in the days, right? You're now starting with the idea that you can make money with Forex is because you're borrowing a lot of money. You're using a lot of leverage. So basically, if you have a small capital, so I'll start with a very small capital, let's say $1,000, 1K. You have a small capital. If you try to use your money to trade, you probably wouldn't get very far, because it's not enough money to make money. But if somebody says, okay, give me the $1,000 and I will give you $400,000 to trade with, you can make money. So what they're doing is they're holding your $1,000 as a deposit and they give you $400,000 to trade with. Well, now you can make money. You don't have to use the whole 400,000, but you can use whatever you want of that and you can make money. And that is why some traders have the impression that with Forex, you can have a small capital and you can really make a lot of money. So there's a catch here also. There's a risk if you don't manage this 1,000 capital in terms of money management. If you don't manage it correctly, you can blow that up. You can blow that up very fast. So you would have to manage how much you're going to lose every time from the 1,000 every time you take a trade. If you lose the trade, if you win, well, it's not how much you can win. You can win quite a lot. But if you're going to lose, you'll really have to manage. So can you get rich with Forex? Of course. But the number one thing you should aim for if you're a retail trader is not to get rich. It's to be consistent in your trading, regardless of whether you're winning very small, but you're winning consistently, which means by the end of the year, you can see that your account is growing, slowly but surely. And if you can get consistency for a good period of time, you will get capital to trade. There's a lot of money out there that people will willingly give you to trade. They will give you money to trade. Either they will copy your trade, either they will give you the accounts to trade, either, there's so many versions of it. I'm not even going to go through all of them. But if if you're making money fast and then losing it fast, and I've had traders who've done that, they've taken $10,000 to 110,000, or 100,000 to 700,000. They've lost most of it back very fast because they're not controlling the risk of how much the money management part, how much they're going to lose on every single trade. So on today's topic, I think, so that you can understand what Forex is. Today's topic is mostly about you understanding. If you're a new trader, if you're not such a successful trader, wondering what the hell is happening to your account, right? If you're already successful and you're doing great, today's webinar is not going to give you a lot. So it's for those traders who are very new traders also, who are wondering, what is Forex? Can you get rich quick? So I'm going to go through very fast what is Forex, what Forex does, or what you should know if you want to be successful in Forex. So I would put it in 4 parts. Let me put it this way. I will divide Forex into 4 parts. 4 parts of the things you need to know. The number one thing is the analysis. You have to have good analysis. You have to be able to analyze chart good. Right? So if you can't do good analysis, you will fail. So it's like anything. If you want to become a doctor, you have to go study medicine. for at least 6 years, and then you will have to do internship and all. If you want to become a lawyer, you have to study. If you want to become a Forex trader, you have to study Forex. You have to study everything about the market. And I mean everything, how your broker works, how leverage works, how everything works. But for you to make successful trades, you have to study analysis, what types of analysis, and I spoke a lot about that, what types exist, how they work, and whether they work, whether they give you an edge in the market, because that is what the analysis is going to do. It's going to give you an edge in the market. It's going to create a bias in you, and you will trade that bias. So you might have heard somewhere out there that people says, well, I don't do forecasts. I have a strategy that makes money. And well, that's a very foolish thing to say, because if you're trading Forex, you're making forecasts. The minute you decide you're going to buy euro, you just made a forecast that euro is going to go up. That's your forecast. That's the only reason you're buying it, because you thought it's going to gain value. You wouldn't go buy something when you think they're losing value, right? Okay, Adnan, I think we lost the screen sharing. Hello, can you hear me? Adnan, can you hear me?
Yeah, I can hear you.
I think the screen sharing lost it. It went to your screen sharing for some reason.
Okay.
Let me share again.
Okay.
Something on your side is not working good. Okay, guys, sorry for that. Something happened and the screen sharing disappeared. I hope you can see it again. Can you see my screen, Adnan?
Yeah, we can.
Can you confirm that is? So let me go back to what I was doing. I don't know where it stopped, or I don't know what was the last thing anybody heard from me. That's the problem. It goes like this. So let me go back to what I was doing. The first thing I said is the analysis part, which you have to learn, right? Because it is the basis of whether you will be successful. Because if you can't analyze the chart, if you can't find a good method of analysis, you're going to fail, regardless of what you do. You're going to fail. The second part of it, which you have to do, right, is having a good strategy. You have to build a strategy based on the analysis. So what is a good strategy? I think that was a question somebody was asking me yesterday, right? Where do you enter? Where do you exit? How do you manage the trade? And that is where strategy comes in. So I'm specifically choose the Cadian charts, because I have a lot of short videos on the Cadian chart posted in YouTube. You guys should go and take a look at it. I'll give you my YouTube link at the end of this webinar. So what I was saying to traders, based on my analysis, is that this is going to have a repeat down here. This is based on the 4-hour analysis, right? So I'll show you where I started it. Where I started it was actually this point here. So we had a move up, we had a correction, we had this. And I was telling, based on my analysis, that this is going to go here. And I said, we have strategies how we're going to trade this to get this piece here. And we took the trade. As you can see, it didn't go. It went up, it came back down, and it started to go up. By the time it came back to this level, by the time it go there, we closed that trade because we realized it's not going. We sold this one, we closed this piece because we realized it's not going. And then we took this trade here and we closed this because we realized that this pattern is going to go back up. Now, I didn't call the buys, although some of my traders bought it. I did not call the buy because now we're selling it back to the downside. Now, that is the strategy. That's where strategy comes in. How do you enter? Where do you enter? What are the criteria to enter the market? How would you manage the trade when you're inside of it? What are the rules for managing the trade? And how you would exit the trade, right? So because we use wave analysis, your strategy is based on wave analysis. So to teach you my strategy, you would definitely have to learn all of this. And that is what I was telling the trader yesterday. I cannot tell you where to enter and where to exit because the rules are based on wave analysis, which means you have to learn this analysis before you can do it. And what I'm saying to you is that we're still selling. That analysis has not changed. The analysis and what has changed is the pattern in the analysis. And when we see change in pattern, we have specific rules how the strategy should kick in, what you should do when you see change in structure, right? So that is what your strategy would do. Control what you do with the trade when it's not going your way as you expect it to go. So strategy would give you that. Now, there's much more on this. I'm not going to go in depth because we will not have time for that. And then the third thing you would have to do, and I think for most new traders, this is super important. Money management. What is money management? Money management is how much money you're going to lose on every single trade you lose. It's the only single thing any trader has total control over. how much money I'm going to lose on every single trade I take. Now, every trade you take, you should make an assumption that you're going to lose that trade. It's not going to go the way you expect it to go. If you have a good strategy and if you have good analysis and good strategy, you're going to win most of them. But the assumption is always that this trade could be the losing one. So how much you're going to lose if you lost this trade? That is what is money management. You will have to control that. I have a whole webinar also on money management. Maybe sometime I can put it up for you guys, because it's pretty simple. It's how much money you plan to lose in every trade. You can calculate. Some people like to use percentage wise. I found that using a 1% or 2% of your account is not very accurate way to manage money, because traders who do that end up taking a lot of losses, simply because some of them were not even willing to accept the 1% or 2% loss on their account. They were willing to accept much less. They weren't willing to accept losses the way they should accept it. So money management is a whole different story. We could go through that the next time in the next series of work. And then the fourth thing that I looked at is called risk management. So what is risk management? Risk management is you deciding whether you need that trade. So let's say we do the analysis and we said, okay, CAD yen is going to go down. Now the question is, okay, we'll wait for the setup. We'll wait for the strategy. The strategy kicks in. We look at it. We have a 100 pip stop, but we only have a 40 pip profit to the target. Would you take the trade? It's going to go, but would you take the trade? In terms of risk management, how much you're risking and how much you're going to making, the risk to reward is no good. So if you're going to choose trades that are having rewards 2 to 1, 3 to 1, 4 to 1 and above, that's what you call risk management. Managing the risk, deciding how much trades, what type of trades you're going to take. You don't take every single trade just because it's a trade setup. You have to decide whether it's a good trade. Whether it's, I don't know, maybe you see a perfect trade setup, but there is a big news event that is going to come and you might get small spikes up and down. Your stop is only 20 pips away. They could take your stops out and then it's going to go exactly where you want it to go. Do you want to trade during that period? Do you have a strategy for that period of time? If you don't, then risk management says you stay out of it, right? So risk management is deciding whether you will take that specific risk on every specific trade you have. And if it's pretty simple, it's not very complicated. It's understanding where the target is, where the larger target is. How do you think this chart moves? How much stop you need to put, all of that, right? And then you decide whether you want the risk. So would I want to take this trade? Yes. And the reason I want to take this trade is not only for it to come to this level or to this level, is because it can come to this level. This is the trade you can end up with. So in terms of risk management, that is a wonderful trade. If I'm going to risk, I don't know, 1% or 2% of my account, that will give me very good returns. So how do I know it's going to get here? And that is where your analysis comes in first. You have to have good analysis. You have to understand how you're going to analyze the chart. So let's start with number one. I look at the analysis. I see that move up. I see this move down. I see a correction and I see this move down. I see another correction and I see this move down. And I'm saying to myself, well, I'm getting another correction here. What are the chances I can get a move down to this level? Way down back to that level. What are the chances of that happening? The probability is on my side. Based on the analysis that I do, the probability is on my side that this trade could go 1, 2, 3, 4, 5 to this level with a smaller correction in here. And this one is a smaller correction too. This is a bigger correction. So if I see the setup in the trade that says it can go there, I don't know if it's going to go there, right? I don't have control over that. The only control I have is if this trade doesn't go that side and I'm going to take a loss, how much I'm going to lose on the trade. That's all. So when you see that, you're looking for a number of things that tells you you can get into this trade. So you go down to the lower time frame and the analysis says it can go. Everything on the chart says that can happen. So we go to the daily, we look at it and we said, you know what? Yeah, we are seeing the very similar thing in the daily. We're seeing an impulse here. We're seeing a 1, 2, 3 correction up, and there's a chance this is going to come here. This whole move from there to there. If not, they're going to come here. They're going to go back up to the top there, and then they're going to come down. That's how the market moves based on wave analysis. So you go to the 4 hour and you said, yeah, I can actually see the same thing in the 4 hour. You've got an impulse here. You've got a 1, 2, 3. We can get this to come. If that doesn't come, you get another correction. You go back up, and then this goes. If this doesn't go, well, this one is already going to go because this one is not showing me any sign of corrective structures unless it becomes a corrective structure, which means you get a deep correction up back to the top. You can drop back here, and then you go for one more up. That is unlikely, but it could happen. If that happens, well, then we will sell again from the top. You will keep looking for the trade to the downside because there's a 99% chance this trade is going to happen. So is it going to go down straight to the bottom? Maybe it will just come, it will give you a flag, it will just come to about this level, break this low, and then go back up. That's okay. We know that could happen based on wave analysis. So if you get an entry here and you have to put a stop here, and by the time it gets here, you have to put it just to break even, which is about 1.5 to 1. This is not even your target, but that would be your first target, which would be about 2 to 1. And then you can keep it to go down there, which would be much more. Of course, you can go and take the trade in a much lower time frame, which means I can go to the 1 hour and say, well, why do I want to do it? Let me do it in the 1 hour. And instead of putting my stop the way I put it there, I can do it easier. I wait for the flag here. I take the breakout here with my stop somewhere above the breakout. Get to this level, this would be your entry, this would be your stop. You get 2 to 1. You can put that to break even. It makes another consolidation, it drops. You get a trade here. You get it a couple more trades to that level. And then it makes another correction and it drops. You keep trading it to the downside. Just like we did in the first drop that we had. This was an entry. You see this where you see here, that was an entry. That dropped here, it didn't go, we put it to break even. It turned out a break even trade. We took this trade. It come here, we put that to break even trade. We took the break of this. This drops here. We know this is going to go back up. We knew that once we break this low, this one is going to go back up. So anywhere in here, you move your stops to close the trade. Right? So that is not as easy as I show you, right? So don't try to repeat it without learning it, without understanding wave analysis, without figuring out what all of that is going to do, right? This, I'm not showing you, I'm not giving you any method of trading here at all. I'm just explaining to you how Forex market works. Don't try to copy what I do just now because you might get it totally wrong, right? You have to understand patterns and where it's going to go. What I'm trying to show you is if you have an analysis that gives you an edge in the market, and if you follow the rules of money management, risk management, and you develop a good strategy on your own, or you get a strategy from somebody who train you, whatever. If you do all of that, the chances are you will have consistency in the market. You will be successful and you will be very consistent because you're managing your money. So let's go now to calculate that. If you do all of that, what are the possibilities? Every time you take a trade, you make sure that the trade goes more than 2 to 1. So multiply by 2. And every time you lose a trade, you either lose it 1 or you go to break even. So I show you, we have the ability, using wave analysis, you have the ability to take a lot of your losses for break even. And let's assume that you took 100 trades and you got 50 of them that you won and 50 that you lost. I'm going to give you 50-50. I could even give you 40-60. 40 you win, 60 you lost. Let's go with that because you're new, right? 40 you win, 60 you lose. The idea is you should win more than you're losing. That's what the edge in the market is, right? If you have a strategy and a method that is giving you analysis that's giving you an edge, you should win 60, 70, 80, 90% of your trades should be winning trades. But let's go that you're learning now, you're only winning 40%. You're getting correct, the rest you're getting wrong. So this is 40 by 2, that's 80% on your account you make. If you use 1%, I'm just going to use 1% for the simplicity's sake, right? You made 80% in your account. 60 you lose by 1. That is, you should lose 60% on your account. But basically what happens? You might get some of that to break even. So let's say you get half of that to break even. 30% break even, 30% loss. You're only going to lose 30%. You should be up 50% on your account by all means. That's just very simple math. In reality, it might look a little different, but if you follow the rules, if you have all those rules and you follow them, it will look better, not worse. You just have to keep following. You can't, it's hard to lose 60% of your trade, even if you don't know a lot of things. There's a chance you're lucky and you might win more than that. I'm just giving you to win 40%. You can win much, much more than that if you have an edge. As you can see, as we were showing you in the charts, right? You can win quite a lot more. If you're using good money management, you're using a good strategy, and you have an edge in the market with the analysis you're using. So is Forex a get-rich scheme? No. But can you make money? Absolutely. Regardless of what anybody is telling you, it's an investment strategy. If you treat it like a business, you treat it like an investment, you have an edge in the market. If you're playing in the casino, in a casino, if you're playing in a casino, you really don't have an edge, right? The house has an edge against you, right? But think of it this way. You still have a 50-50% chance there. Now, what if you had a specific strategy that would put you good? And what if you could analyze the market? What if you could analyze what's happening there? And that would give you an edge in the casino, right? So you're in a casino and you can get an edge simply by analyzing what's going on. Let's say they give you all the data, you could analyze it. You have the data on the charts and you could analyze, you know which cards is going to come next, or where the ball is going to go next, what number is going to come. You know that. And you can use that to make a guess. They don't give you, of course, but what if they've given you all those stats and you could study it and you have an edge in the market, right? So you have an edge, and then you have a specific strategy that says, well, if it doesn't do this, you're going to do this. Or if it does this, you're going to do it. What if they allow you to come out of the trade for break even? What if every time you place a bet and you don't like the bet, you can pull it off for break even? Take back your money. That would be great, right? You'll probably beat the house. It's the same thing, but they're not allowing you to do that. But that's why trading is not gambling. It's a business, because you can take out your money for break even. You can take out your money for small profit if you don't like the trade anymore. So you have a lot of control over what you can do. So but the number one reason why a lot of traders fail is because they're trying to trade without the basic knowledge of what Forex is. Absolutely. I mean, they lack very basic knowledge. People just have money. They go to open an account with zero knowledge and said, okay, I know how to click this darn thing. Click buy, click sell. Good, bingo, I'm ready to be a Forex trader. Well, you're not ready. And very quick, the market teaches you a lesson that you're not ready. You need to go study a lot. And I mean study, I mean learn this. You can either learn it on your own, you take your own time and take 3, 4, 5 years and learn it, or you can pay somebody to teach you. And I hope you're picking the right people to do that, because I pay $5,000 to learn support and resistance, which by now even all of you here know is useless, right? I paid $5,000 to learn that stuff. So you might fall trap with 1 or 2 of those things, but then you eventually find the right person who can teach you what the market is actually doing. See? Or you can learn it on your own. That's also an option. It's learnable. You just take a couple more years to do it. So if you can get rich, yes, you can make a lot of money. It's possible. But don't treat it that way. Treat it like a business. I told you, we had traders that we had a guy 100,000 to 750,000 in less than a year. He did break some of the rules. He knew it. And if you were very careful, if he had used a few more things carefully, he probably would have pulled much more money out of the market. He ended up giving back a very big portion, but he did take out a lot. He took out every month and he still had a capital to trade with afterwards. So you can make money. We had traders who 5, 6 times their account in a year. I'm telling you, people who I taught and who were in the group. How do I know that? I did 400 interviews, video interviews with all my traders, 487 video interviews. So I know exactly who did what. Some of them lost their account. Some of them were very careless. They didn't follow any money management rule. They didn't follow any of the rules that we taught them. Traders are like that. They learn stuff and then they don't, they just put it aside because they feel they can beat the market with different odds. They don't have to use any strategy. They could just beat the market. They have a good view. They have a clear idea what it's doing. They're going to go make money. And then they figure out, no, they don't have a clear idea. So I think that's pretty much what I wanted to pass over to you guys today. The things you need to know if you want to be successful. And if you do those things, what you're doing, I can't guarantee you that even if you do all of that, you're going to be successful, because then it comes back to your ability to handle risk, your ability to implement things correctly, your ability to follow the rules, right? It's like you could go to law school, but that doesn't mean you're going to be a good lawyer, right? You might come out and say, you know what, this thing is not mine. I'm going to go learn computer science, or I'm going to go do something else for my living, because law is not your thing. It's just not your thing. You can't argue properly. You're scared of crowds and anything, any amount of possible reasons why you might not be. So if you can master all of this, and and you can implement the strategy you developed, you have to back test it. And if you back test it and it's good and you can implement it properly, great. You are going to be successful. But don't dream about become successful with zero knowledge in your head. Or somebody is giving me, I'll go get some signals from somebody and that will be. You can't trade signals you don't understand, right? It's like saying, okay, I would fly the plane if the pilot just tell me what I need to do. He's just going to give me a little instructions, pull this, push that, press this, do that, and great, I'll be a pilot. No, you can't. It's the same thing. Can all of us do cut? Can all of us cut something? And all of you may probably cut meat in your life. Yes, you can cut. Would you be a surgeon? Can you do an operation? Ask yourself, it's very simple. You can cut. It's not like you can't cut. You can cut, you can stitch. You can do a lot of stuff, but you're not going to go do the operation. Right? Nobody will even allow you to go close to that. Because you need the knowledge. You need the practice. You need the experience. Without all of that, you're never going to be with a doctor or a surgeon. So it's the same thing in Forex. It is pretty much the same thing. It's a profession and it's a business. You've got to treat it that way. Those who don't treat it that way learn the very hard way. So you guys are lucky to be here because you have a very good broker who is taking interest in you. He's educating you. Not a lot of brokers do this. I can tell you, a lot of brokers contact me. I mean, close to the hundreds almost of brokers. Most of the brokers out there I've talked to, they contact me. They said, hey, we want you to be IB. We want you to be this. And I always refuse. I said, I can do one thing only for you. I can do few free webinars for your traders because that will educate them. Only few brokers took up the offer. Very few brokers took up the offer. So only one thing I can say about your broker, they seem to want to educate you, and that's a good thing. If your broker thinks you should be educated, that's a very good thing. So I think with that, by the way, I promised to show you my YouTube. Why you may want to look at my YouTube video is Anil Mangal. Let me just show you before I pass it over to Adnan. 1 second, I was trying to put it here and it gone up. Oh, sorry, it's not coming up. Oh, it's coming up. YouTube, Anil Mangal YouTube/C/Anil Mangal. You can find me there. We have hundreds of videos here. Some are educational. You can look at the playlist. You will see educational videos there. And you would see others, right? So you will see a number of flash recording testimonials, educational video, and there are hundreds, thousands of videos you can learn from. I post this one, I post today. It's a very short one. These are 5-6 minutes videos. Some of them are 10 minutes. They show a specific charts setup that I see. So you can go there. Sorry, did I close my, let me bring this back here. And I think I just need to close this one. Nope, I closed the whole thing. Let me bring this back here now and see if I get it. Okay, guys, so I'll pass the screen over. Adnan, I'll just pass it over to you. I'll stop sharing, pass it over to you. You take the screen share. And
okay. Thank you for the time. And thank you everyone for joining in. Today we had a bit of a issue while going live on Facebook. So we had to switch over to YouTube. And I don't think a lot of people could actually switch over in time. But anyways, thank you, Anil. Thank you for the time. Thank you for the series. This was a wonderful experience. I guess people have learned a lot, and they would learn a lot more in the next series that comes out. So I guess it's going to be next month, I guess. So
okay, then. Thank you. Bye, guys.
Thank you.
Have a great
Bye.
weekend. And then you can close the room.